back here with another video. On this session, we're going to be checking out the charts of interest for the week of the 21st of February 2022. So I'm your host here, Sbo Dlamini, the owner and founder of Stocks for Hope. So as our slogan says, everything about investing. So on this video here today, it is powered by Regenesis Markets. So we are proud to announce that we are forming a partnership and a strong alliance with Regenesis Markets. So Regenesis Markets is an authorized FSP and a financial markets broker. Yeah, so if you do wanna trade forex, commodities, CFD shares, crypto, and you as well as use the MT4 or the MT5 platform, so you can just click on the link that is attached to this video to open an account, so you can like trade with the minimum of spread and most competitive rates there and spreads on the market. So guys, remember that the disclaimer reads there that trading forex and futures options has a large potential reward but also large potential risk. The higher degree of leverage can work against you as well as for you. You must be aware of the risk of investing in forex and futures options and be willing to accept them in order to trade these markets. So please do not trade borrowed money, and please, you cannot trade money you cannot afford to lose. So any loss or profit which may arise directly or indirectly from the use of the information that is presented on this presentation, Stocks for Hope and Regenesis Markets will not be liable for it. So please remember that past performance of any trading system or methodology is not necessarily indicative of future results. So that is just straight and clear the disclaimer right there. So these videos are mainly for educational purposes, not trading advice or investment advice. So guys, the things that we are going to be looking at on this video, we're going to look at Bitcoin, we're going to check out the dollar index, we're going to look at the US 10-year yield, and again we're going to look at EURUSD, GBPUSD, USDZAR, as well as gold. Then we're going to look at USD oil. Then on the JSE side, we're going to look at Harmony Gold, First Rand, and then we're going to check out South 32. So if we just move from what we are seeing now and then just try to take a look at what is happening there on the economic side. So we might see some economic data that might come out this week. So there might be some really interesting economic data that might actually come out this week. So on Monday it would be a holiday in the United States, President's Day, and then on Tuesday we might see some German info business climate that might come out there. And then on Wednesday might be some a volatile deal there for the New Zealand dollar, because there will be some interest rates for the New Zealand dollar that will be coming out and that day. And then on Thursday, and the Bank of England governor will be speaking on Thursday. And then if we move along the week, we see that there are initial jobless claims there coming from the US side, and then the new home sales, and then we're going to close off the week with some core durable goods on the US side, and then as the Fed monetary policy reports. So the Fed is just on a straight line. They are going to tighten their rates the following month on the March 16th meeting. So they haven't made any changes or signaled anything apart that they might be increasing rates on that day. So if we can just move along and see what has been happening there on the crypto space, we can just see that the past 24 hours on the time of recording now, Bitcoin has been up a mere 1.2%, but in the past 7 days it is down about 5% there, 4.95%. As you can see that the other cryptos as well, Ethereum 0.7% the past 24 hours, and then in the past 7 days it is down 5%. So you can just see that the other cryptos they are trying to pull back, but as long as Bitcoin it is still trading lower, the other cryptos are not going to perform that much. So if we can look at the Bitcoin charts itself, I am still pretty much bearish here on Bitcoin. I am still much bearish on Bitcoin here myself. As you can see that on the previous video we highlighted that there is a bearish flag here on the weekly charts, and if we move even lower to a daily chart, we might actually see that this bearish flag is telling us that price might actually break this lower band of the bearish flag. So now it is currently trading at this band of the triangle, sorry, of the flag of the bearish flag. So we might see price moving a little bit higher, and then it will get rejected again on the 45,000 level, and then price might start falling. So 30,000 level is still on the cards. 24,000 is even as low as the 17,200 level that I have been speaking about the past couple of weeks. So if we can look at the US 10-year yield, US so the US government bonds, if we can look at them, they are telling us that the market is actually doing a pullback there. So the yields actually jumped a couple of days ago, and they jumped and touched the 2% level. So now they are just trying to make a pullback. Perhaps the pullback can extend to 1.7%, and then the market will eventually rebound from this level, and then it will start moving higher again. So this is the daily charts. If we can just change to an even higher time frame, it will just tell us an even bigger picture that yes, the market it is in a pullback phase, that it may come to this level, and it might jump and go higher. So if yields go higher, eventually stocks are going to move in the opposite direction. So if we're looking at the dollar index there itself, because these things they simply have a relationship with each other, the dollar index, the 10-year yield, and also the S&P 500, there is a relationship there. So on the previous video that we spoke about the US dollar index, we did signal that the US dollar index will try to move higher to back to the 96.89 level, because it was rejected around that level. So we're still anticipating that the US dollar might gain some steam and try to move and push back to the 96.89 level. And then if it breaks this level, 98.89 is on the cards, and if that level doesn't get rejected, the $100 level, it is still looking pretty much attractive. So if we look at the charts of the German data, because we also said that we're going to look at the German data, GE. It's not GE30, it's DE30. Okay, so if we look at some indices now, we're going to start with the German index now, the DAX 30. So the DAX is telling us that there might be this cap formation that is happening there, this cap formation that is currently happening there. So if this cap formation that is happening here, price might actually break lower, because we see some double rejection candles that are here. The market tried to push higher to the 15,600 level, it got rejected, and then the previous week again it tried to push to this level and then it got rejected again. So we are seeing that the German DAX is looking pretty much bearish. That's because the 14,950 level, it is a most significant level. It is a floor for the German 30. So if this level breaks, we might see some price action going to 14,200 and then even as low as 14,718. So that's pretty much the German index. So if we're looking at the SPX, so the S&P 500 on the other hand, these indices they pretty much look alike, because if one index does something, the other index tries to follow what the other one did. So the S&P 500 again is telling us that there is this head and shoulder pattern that is currently happening here. So this is the left shoulder, this entire portion here is the head, and then this side here, it is pretty much the right shoulder. So we might actually, so we saw that there was a rejection at the 45.38 level, and then price, it is really starting to move lower. So the lowest point that we are seeing that it might move is that it might go to the 42.71 level, even as low as the 40.95 level. So those are pretty much levels that are a bit extreme there that we are talking about. But if you are looking at the way things are happening, from the crypto side, crypto is going down, and there was a war currently brewing, and now the Fed, it is really straight up about tightening their monetary policy. So those things and those factors are really trying to tell us that the market is going to be in a really corrective phase there. So let me just wait for my chart to load there again. Okay, we are back. So as we have said that the S&P 500 it is moving lower. So if we actually check out what's happening there on the Nasdaq, so on the Nasdaq again, we are actually seeing a similar structure there that is almost likely to happen as the S&P 500. So there is actually a floor here at this level. If I can move to a 4-hour chart, there's actually a floor here for the Nasdaq. So this level is pretty much important. This level right here, you can see that the market touched this level and touched again 1 2 3 4 about 4 times, and then now it is back at this level. So if it's coming back to this level, so this level needs to hold. So this is basically the 14,000 level. So the 14,000 needs to hold. If it trades below this 14,000 level, it is going to be a straight shot down to 13,000. So that's just a straight 1,000 points there. So if this market doesn't bounce back to 14,400s, the bounce back could even extend to the 15,270 level. But if that doesn't happen, the market is going to straight down to the 1300s level. So if we can just look at gold. So gold, we had said that the structure of gold, it's looking really extremely bullish. So if we move to these higher time frames, we are actually seeing that gold, it is really bullish, and it recently broke out of this multi-year range. So now it is pushing higher. So the previous week it did touch the 1,900 level. So the next one on the cards, it's 1,988 and 2,078 level there. So another one that we need to check out, which is WTI. Oh, sorry, it is US oil. US oil. So US oil and WTI are pretty much the same thing there. So if we look at WTI, we haven't changed our sentiment here on WTI again. So since the war with Ukraine and Russia has eased up a bit, so that's why the oil prices has been pulling back lower a bit. So we are still pretty much bullish. Nothing has changed here on the price of oil. $108 is on the cards. Even the $132 level, it is still on the chart, on the cards. So if we go to look at currencies now, let us look at Euro USD. So euro dollar, there is just still some pressure there on euro USD. We might actually see some pressure there. Euro dollar being under pressure this coming week now. So this is just a technical pattern that I'm just seeing here. So the market touched here and then it came back to retest again and then retest the level again. So now it is making and then it fell. It first touched here and then it touched again. So it broke out this trend line. So maybe it will come back, retest the trend line, and then fall to the 1,000, sorry, to the 1.1300 level. So this is a 4-hour chart. This trade might actually take a week or a couple of weeks to actually play out. So a similar story with GBPUSD. On GBPUSD, we are seeing a pretty much similar story there, that price actually came and touched this level which was previously tested, and then it came to retest it again, and then it started falling away from this rising wedge pattern that was here. So we might actually see price pushing lower to at least 1.35500 level, even as low as the 3500s level. So these are pretty much bearish scenarios that I spoke about. If the US dollar pushes higher and if the 10-year yield pushes higher, these trades might actually play out in the way that we are talking about. So on the currency pairs as well, let us look at our own USDZAR. So USDZAR, as we said, that USDZAR might try to bounce on this zone that was here. So this is a daily chart. Let me just squeeze it. This is the daily chart. We actually draw a zone here that USDZAR might actually bounce on this zone. So it did exactly that it's bouncing on this zone. So we might actually see the ZAR being under pressure this coming week. 1550 might be on the cards, even as high as 1588 might be on the cards there on USDZAR. Because if we look at the weekly charts there, we are actually seeing that yes, the FTR candle is still pretty much intact here. So maybe a reversal pattern. We are looking at a reversal pattern here, because there's actually a rejection candle that is at play. So we might actually see price trying to push higher. So on the JSE side, let's look at Harmony Gold. So since we spoke about gold, let us look at what the gold stocks are doing. So Harmony Gold is really looking attractive, as you can see here on the weekly charts, that there might be this bullish flag that is here, which might be a continuation of this reverse head and shoulder. So price might actually try to push higher. If we move to the daily charts, the daily charts is a little bit more clearer. If we can do it like this, so this is the left shoulder, the entire head down here, and then this is this entire part here, it is the right shoulder. So price might hit the 70 bucks level, 80 bucks, even as 88 rand there a share. So the next one we need to look at is First Rand FSR. So as much as we are in the rate cycle everywhere in the world, so banks are still really much looking attractive. So First Rand, we are seeing that it is currently trying to do a pullback. So at 64 rand 70, it might find value around this level, and then that value will try to push it to 70 rand, and then it might push to 76 rand 84 cents there. That is First Rand. So the last one that you need to talk about is South 32. So South 32, it is a dual listed company. It is listed in Australia. It is listed in London. So we are going to talk about the South African listing here. So South 32, we are actually seeing that on the weekly chart here, we are actually seeing that price is just pushing higher. It is just squeezing higher. So it did a little pullback to this level, the 42 rand level, and now it is trading at its recent all-time high of 50 rand. So 52 rand is on the cards, and the next level is there is 57 rand, and the highest it may go it's 65 rand a share. So that's pretty much about it, the things that we wanted to share today on this video, guys. So remember, our video today, guys, it is powered by our broker that we are going to be working with, which is Genesis Markets. So guys, if you do like our work, please like, subscribe and share these videos so we can get motivated and get more people who watch our videos and also who subscribe on our channel. So our disclaimer there, guys, again, do not trade money you cannot afford to lose. These videos are mainly for educational purposes, not trading or investment advice. So to get in touch with us, you can pretty much email me at mo.dlamini.interpret@gmail.com. On social media, on Facebook and Twitter, it's Stocks for Hope, and then as well on YouTube, it's Stocks for Hope. And my personal handle there on Twitter is Mo_Dlamini, and then on TradingView, it's Mo_Dlamini. So to open an account with our broker, Genesis Markets, you can click on the link and then join us and be part of this wonderful broker, which is Genesis Market. So from me, it is goodbye for now. So I'll definitely check you out on the next